Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, in the tug of war between bulls and bears, the bears clearly won today. It was weekly expiry. One would have thought there would be some bit of recovery after a range-bound session, but the selling only exacerbated in the last hour of trade. In fact, we are staring at a 100-point cut on the Nifty. It's been rather dull, Yatin, barring a couple of sessions.
Entire week, I think the week is slow. I think the markets are anticipating some trade deal. That is not happening, and hence we are trading in a very tight range. The results also, there are reactions which are there, IT obviously, but the entire market is moving in a tight range, except for certain stocks in news and specific reactions. There is nothing much to do in the markets. In fact, the volumes are also quite low, especially in the option segment with respect to the derivatives expiry this week.
That's true. I think volumes have, of course, taken a hit after the whole Jane Street saga. But as I mentioned, selling did exacerbate. So 25,100 that has been defended, but we gave up 25,200. And looking at the banks, they were among the laggards today.
Correct.
The PSU banking index as well succumbed to selling pressure. It had been witnessing good buying interest of late, but today it came under profit taking as well. IT renewed selling pressure after 2 days of gains. So IT once again down in excess of 1%. The broader end of the markets also fell, in tandem with markets, although the fall was more measured there. Relative better outperformance coming in from the broader end of the markets. Aside of all the sectors that I mentioned, there were some pockets that were still trying to, get the markets up, but failed to do so. Metals, that sector did well today. FMCG also saw buying interest, and so did real estate. Pocket. That index was up somewhere around 1% or thereabouts. Result reactions you mentioned, you'll see Tech Mahindra, that's the top Nifty laggard. Although margin performance was steady, it was the constant currency revenue growth. Top line growth has been missing. Even if margins were okay for IT names, top line growth, that's where the street is focusing, and it has been a disappointment right from TCS to even Tech Mahindra, because the CC revenue growth fell 1.4%, much more than what was being anticipated, around 0.5 to 0.7. Now it's fell over 1.5%. I think the street was focusing in on that, and of course, aside of that, there are valuation concerns also regarding this stock. So there's a bull versus bear mode, on the street when it comes to Tech Mahindra. But that was the top Nifty laggard. IndusInd Bank, Infosys, SBI Life, HCL Tech. Eternal also in recent times has come under some bit of selling pressure. L&T, Wipro, these were the other laggards. But 3 out of the top Nifty 5 gainers are from the Tata Group stocks. Tata Consumer, Tata Steel, Trent, Titan. In fact, 5 out of the top 6 stocks are from the Tata Group stocks. Aside of that, Hindalco did well. Cipla, Hero Moto once again back in top gear. JSW Steel, Eicher Motors, ONGC, those were some of the other movers. But I think broader end of the markets, that's where you could see some movers and solely driven by results. The likes of Ixigo, for that matter, 20% up.
Yeah, that stock moved higher. But if you look at the advance decline ratio, slightly weaker than yesterday. Yesterday it was 3:2. Today it swung to the negative side. Almost 2 advances for 3 declines broadly in the markets. Sona Comstar, and after the TV18 exclusive that they might start manufacturing for Chinese EV major BYD, that stock moved nearly 7% in trade. Adani Wilmar, obviously today we have Adani Group, which has sold their holding, a portion of it, nearly 20% to Wilmar International at a price of 275 per share, and that stock moved nearly 6% in trade. So these are the stocks in focus. What was not doing well is Newgen. After the numbers, the stock was down 6%. Network 18 after a 14% move yesterday, down 4% today. Bharat Dynamics, Swan Energy were the other stocks in the defense space, which saw some profit taking 3-4% down for each stock. But in terms of stocks at new highs, wealth management and AMC companies, Anand Rathi up 3% today, new 52-week high. HDFC AMC post the numbers, saw 3% move. That stock is at 52-week highs, and so is the case with Schneider, Shirma, as well as Asahi India. All of these stocks at new highs.
Okay, those are all about the mid-cap end of the market. But as we speak, I think Axis Bank numbers have come out. You can see the provisions have jumped on a quarter-on-quarter basis, and I think profits also came in below expectations. So looks like it is a below.
Yeah, I think the net interest income is almost 400 crores below expectations.
Below expectations. A weak quarter for Axis Bank. We will just see what the margin figure is looking like. But I think in terms of NPAs also, asset quality has also worsened for Axis Bank. That stock will be reacting to earnings tomorrow. Expect a negative reaction there as well. But Yatin, before I move on to the stocks, SBI QIP opened up yesterday. How was the interest?
Yeah, so interest is quite high, almost 3-4 times demand. Good mutual funds participation. We have LIC, obviously we spoke about this yesterday, but today we have Quant Mutual Fund, ICICI Pru Life, Birla Mutual Fund, all of these mutual funds putting money. We also have Nomura, from the FIIs, Millennium, Marshall Wace, all of these also participating. So very strong demand for SBI. Obviously, after the move yesterday, we saw some profit taking in trade today. But yes, SBI, clearly the QIP has been a great success, probably at 800, 815, anywhere between that. The issue price could be fixed. We are waiting for the management commentary. But yes, a very successful fundraise for SBI, nearly 25,000 crores targeted to raise via this QIP.
All right, and of course, looking to augment capital base there, a huge success, SBI QIP. On that note, let's take a look at the stocks that are on our radar this afternoon. L&T Tech from the ER&D space, that's the first stock. Constant currency revenue there as well dropped in excess of 4%, but margin performance was fairly steady, and that too in a seasonally weak quarter. Profits were up somewhere around 0.7% or thereabout on a sequential basis. That was also above expectations. Dollar revenue was a slight miss, somewhere around 3% down on a quarter-on-quarter basis, but deal wins were fairly healthy. Third straight quarter of $200 million plus deals, and because of that, Street believes that the revenue conversion will also be strong going forward. And in general, analysts believe that the second half of the year, of the financial year, will be much better for some of these ER&D players, including L&T Tech, because of faster revenue as the deal wins have been fairly healthy. The company as well has been prioritizing long-term moats rather than reacting to short-term macro situations. It has reiterated its double-digit revenue growth guidance for FY26, and has also said that it is targeting $2 billion in revenue with 17 to 18% EBIT margin over the medium term. Now, looking at some of the brokerage reactions then, Nomura has a reduced call. The target price is lower at 3,600 rupees per share, I beg your pardon. They've said that the first quarter has missed expectations on the revenue front, but deal wins were strong and the pipeline is also looking fairly robust for the company. But it has also pointed out that the double-digit revenue ambition looks a little far-fetched. And of course, EBIT margin is also likely to come under pressure in the second quarter, and any recovery in margins will only be gradual over FY26 to FY28. Also, analysts have also pointed out that although deal wins have been healthy, future execution, in fact, capabilities is something that will determine whether there will be a marked improvement going forward or not. Morgan Stanley, equal weight call, target price is higher at 4,500 rupees per share. They've said that the near-term view remains positively biased, although upside may be limited from here. That's what Morgan Stanley has said. And lastly, HSBC again has a hold call. Target price is at 4,790, higher than all the three brokerages. And they've said that the strong deals will likely improve the company's performance in the second half, but the organic growth is weaker compared to its peers like Tata Tech and Tata Elxsi. But it has also mentioned that in terms of ER&D capabilities, this particular company is well placed, better placed rather, compared to its peers. So a lot hinges on the recovery in the second half. Deal wins have been healthy, and revenue conversion, that also looks healthy according to analysts.
Absolutely, and that stock moved nearly 1.5%. I think the outlook, the quarter was not that great, but yes, they have maintained their FY26 outlook and the longer term outlook when it comes to the revenue guidance. But Glenmark Pharma, that stock didn't move today. After a strong move, we have seen an analyst meet which happened yesterday, and post the analyst meet, the stock has been under slight pressure. The management now says that the R&D costs will get reduced moving forward, which will boost the margins. So broadly, the kind of licensing income as well as the windfall gains the company would gain from the molecule sale, that will support the overall margins. They are expecting that there will be a 12 to 14% revenue CAGR, which is slightly lower than what the street was probably anticipating. And when it comes to IGI, the fundraise ahead could happen via an IPO, is what the management has been talking about. And also they are looking to increase the dividend payout, given the fact that the balance sheet would improve after the recent deal with AbbVie, which is a Abbott company. So after that molecule sale, things are looking slightly better for Glenmark, but probably today's analyst meet outcome was used as a profit taking tool, and hence the stock ended the day lower by nearly 1.5–2%.
Right. I think after that major deal with AbbVie, we've already seen quite a fair bit of run up on shares of Glenmark. A couple of analysts I spoke to, they said that upside from here for Glenmark may be limited, given the fact that it has already seen such a strong up move. But yes, a big transformational deal, and stock has been in focus ever since. But one stock that was a high flyer in trade today, I think, was Ixigo. Solid numbers, and that too in a quarter that was marked by war and that devastating accident, Air India accident. Even then, the company has clocked in a very strong quarter. The entire travel and tourism sector, in fact, has shown resilience, and the company has had some smart strategies up its sleeve, in a highly competitive environment, and it's not, compromised too much on its profitability as well. It's the newer verticals that have led the growth for the company. It's seen meaningful market share gains as well. There's been a strong growth in gross transactional value as well. It has gone up over 50% on a year-on-year basis, and the growth is being led by high margin flight and buses segments. Margins may have been a slight pain point, given the fact that the company is investing for future growth, which is why both contribution margins and EBITDA margins also came under slight pressure. But the key differentiator for Ixigo has been its strong foothold in the smaller cities, metros, and deep penetration in smaller towns, and also its value-added services. Looking at the numbers, the flights business revenue grew 148% on a year-on-year basis. Trains business also saw revenue growth of 30% or so. Buses saw growth of over 90%. Management, in fact, was on CNBC TV 18. They've pointed out that they weren't expecting such a strong growth in both flights and buses segments. It's been better than what they were anticipating. Growth has been driven by focus on middle India and first-time flyers. They've acknowledged the fact that there has been some bit of volatility in air travel over the last couple of months, but they've maintained that they will continue to grow the gross transactional value at over 40% for FY26. They've grown market share from 58 to 60%. Flight market share has also increased to double digits in the online travel agency share. And market share in buses is also in late teens. The hotel business, which they are looking to scale up, that has also seen strong growth on a month-on-month basis. The stock hit a record high. I think the issue price was what, 73?
I don't
around
remember,
that.
But yeah, could be that.
But now it's become a 200 rupee stock, high flyer today, and it kind of hit its all-time highs in trade today. Solid numbers, and yes, that was the stock of the day.
Absolutely.
Ixigo.
And I think at the opening we said that there is stock specific action that continues, so do watch out for all of those earnings, because clearly that would now determine the market mood, since we have the absence of the trade deal, which is not yet happening.
All right, that's true. And Axis Bank, that's something we'll be reacting to tomorrow. Not great. The numbers are looking very weak. Let's see what the management has to say in the call later in the evening. So all eyes will be on Axis Bank tomorrow morning. But with that, we're completely timed out on closing bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and we'll see you tomorrow morning. Thank you.